You're welcome.
Okay,
Click
so
got it.
just for the recording, can you just introduce yourself and like your job title?
Sure. Mickey Orta, NBT Bank, Senior Vice President and Director of Financial Services, and CEO of NBT Capital Management, which is our RIA.
Alrighty. So like where's like kind of like your day-to-day role for MBT?
Sure, sure. So my major responsibility is to ensure that our financial consultants and registered investment advisors are, meeting their production goals, their compliance goals, and servicing their clients. So every day, I start off with checking our production reports, our balance sheet, income statement to see what's happened over the last 24 hours. I look for any kind of red flags that might pop up on the compliance side of the house. Um, so that's like the reporting side of it. Of course, answering emails and things that have come in throughout the day. I spend a lot of time doing that. And then, honestly, I'm on the phone a lot, lots of meetings, either planning, strategizing with my colleagues or my consultants. Um, I do a lot of recruiting as well, so we're constantly doing that. So and every day is different. So it all kind of depends on what's coming up. This time of year, we're doing a lot with budget and planning for 2024. So a lot of time is being spent there.
Gotcha, thank you. So next question, like how did you like find yourself in the finance field? I know you started in obviously a smaller role in the bank, so
Yeah. So I went to college, and my major was finance and economics. So it's double major there. And so I knew, that's where I wanted to be. Got into an entry level position with a small community bank, and I was an investment assistant, and then really just worked up the ranks. Just busted my butt, and and put in lots of hours, and learned, and never said no to an assignment, and just kept at it. And yeah, I climbed the ranks. And I've been doing this for 25 years now, and I would say the last 10 of it's been in a management type role. So yeah, just started from the bottom and worked my way up.
yeah. So with NBT, I know you mentioned like you started with a smaller regional bank. Can you tell me like how you got to NBT and like a little bit about like the bank?
Sure. Yep. First part of the question, how I got here, I was at a smaller community bank with a pretty good job. I met the president of wealth management in a New York bankers committee that we both served on, and they had some folks leave and had an opportunity to grow the team and head in a different direction once those individuals left. And because of my relationship with him on this committee, getting to know each other, he reached out to me to see if it would be something I would be interested in pursuing. And this gentleman was one of those individuals that you always say yes to, right? And take that cup of coffee or that breakfast, and that's what I did. And it was once it was after that, it was history, right? We just kind of clicked, and they actually ended up creating a job for me that was big enough to get me to move over from where I was. And yeah, so that's how I got here. A little bit about NBT. So we are about we just did an acquisition of a smaller bank in Connecticut. So we're about 14 billion in size now. The balance sheet. We're in 7 states. Yes, really, the core is New York, but we go up into New England. We do full service banking, so your typical savings, checking, savings accounts, mortgages, loans. But we also own an insurance agency, a retirement record keeping company, and a registered investment advisor. And then we also, well, not a lot of folks know this about us. We do alternative lending, so we work with solar lenders, SunGage and those folks. We do some stuff with the fintech companies as well. So we're really diversified, and we got a pretty good product mix.
All right, yeah. So I mean, with your like being in management, like in particular, like what skills and strengths like kind of like have helped you like do well in your job?
Sure, great question. Communication's key. I think receiving it, right? You have to be open minded and willing to take Sometimes the tough criticism for sure, but you also have to be a really good communicator. Your team needs to know, their expectations, what's expected of them. You need to measure that and be upfront with them and honest. And I think that's a big part of it. So communication for sure. Multitasking, you got to be able to, lots of different things are coming at you. So you have to be able to prioritize your day, move things around on the checklist to make sure that, the fires that are being put out for sure. Um, I would say also that you have to be willing to learn more than just your role. Like for me, I try to learn as much about the bank as I can. So when someone asks me to do something, I have a better understanding of, okay, my task here is going to impact this, and this down the line. So I think that's huge as well. Um, and I also think, the little thing, saying hello to folks in the morning, good morning, thank you, just being courteous and respectful and treating, I try to treat everyone the same, no matter what your level is in the company, because we're all human beings and we all have feelings, right? And we all want to do our job, and I think you get more out of folks when you lead by positive reinforcement than negative reinforcement.
Yeah, great. Um, so like, what was like the transition from the like, because you were financial advisor before, right? So what was the
Right.
transition from that into the managerial like side of work like?
Yeah, that was hard because you so up until the point you go into management, you're really judged on your production and how well you do, right? And you can measure that, and that's on your scorecard, your bonus, whatever it may be. That's a measurable item you can talk to your manager. When you go into management, so much of what you do is not measured. Having good conversations, coaching, all those types of things. So it kind of went from I knew where I stood to kind of not knowing where I stood for a lot of the year based on the review process. The other thing too is often you move from you're really good at what you're doing to move up into management. And sometimes there's not that training or that help to get you the transition, so you kind of have to learn on your own. So for me, I sought out mentors and asked people for help and guidance on how they did things, and kind of incorporated a bunch of other things that were working for people into my own style. And that's the other thing, you have to find your own style, right? You can't you can emulate some folks, but you have to be your own person, and you have to stay true to who you are. And for me, that's really worked out really well.
Yeah, awesome. Um, so I know like the financial advisors that you like Rob and Shane, like them. You said like in my field period that they typically are like their fee is around like 0.5% to 1%, right?
Hmm.
So like how much of that goes for compensation wise goes to the advisor and how much goes to the company?
Yeah. So depending on the advisor, it can range from 30 to 40% goes to the advisor, and the rest goes to the company.
Okay,
Yeah.
gotcha. Um, And so when you first got into like the field, I know you were working for the other bank at the time, but like what was like the how was like the workload for like when you first got in?
Yeah. So I have lots of energy, and even still to this day, doing this 25 years. So for me, I've always had more than what the other guy or gal is doing, because I just have this ability to plow through it, make decisions, move to the next. So for me, I mean, I at my peak, I was handling like 600 accounts spread out, throughout from New York up to Maine, and then I even had some folks down in Florida. And I was just able, again, prioritization, understanding the book of business, who are your squeaky wheels that needed the grease, right? And then who you could kind of only touch once, maybe a year, twice a year. So that's really important. You have to understand your clients and your book of business and where you need to spend your time. Um, I'm a big calendar guy. I write everything down. And so for me, start of every week, I look at my calendar. A monthly, I'm looking at my calendar 3 months down, and trying to manage that the best I can. And that's important. And then, again, and the last thing I'll say to that, Quinn, is setting client expectations. Like if you said at the beginning, hey, Mr. Smith, we're going to talk 3 times a year. We're going to put it on a quarterly, review cycle, whatever it may be. That way they know. If you kind of leave it up to them, it could go 5 years before you hear from them, or they could call you every day, right? So you kind of have to do that as well.
So before we did this, I looked at your kind of like bio on the NBT website, and it said that you were on the board for a few different companies, right?
Yep.
So can you just kind of like tell me like how that came to be and like what that requires you to do?
Sure. Yeah. So, a big part of a community bank is the community and your involvement in the community. One, it's a really good thing to do for your community. Two, I firmly believe that it pays benefits down the road for the bank and for the individual, both professionally and personally. So I learned that very early on and was encouraged to seek out boards that I had some passion around and was interested in. And that's where I tell folks to start. Now, oftentimes what ends up happening is you get on a board, people get to know you, and then they start recruiting you for other boards. And that's kind of what happened with me. I think I was on 4 boards at one time, and it's a lot. But it's also you're doing a lot of good in the community. So I think that's the biggest piece is just try to find something that you're passionate about, you care about, and that you want to roll up your sleeves and help. But you also can't overcommit because it's a volunteer organization, but sometimes they treat you as an employee, and it can take up some time. So it's important, but you got to do what you're interested in, and make sure you have the time commitment because you got a day job, you have families, whatever it may be. But I think it's really, really important to be as active as you can. You don't have to be on a board. You can be volunteering for community events or whatever it may be.
So like what like can you give me any specifics on what you do for the boards or?
Oh, sure. Yeah. When I just jumped on 2 years ago now was Adirondack Mountain Club. So as you know, I'm a big outdoors guy. So I've gone up there and volunteered to help clean trails, do those types of things. But as far as the board goes, I am chair of our board development committee. So my main role is for that board is to identify future board members. So I'll go through my network of folks or ask around, and then I have lunch with folks, talk up the organization, and then hopefully get them to join and be part of it. So that's a big deal. The other thing, we're fiduciaries as a board, so you have to make sure the financials look good. The executive director is doing his or her job. The audit committee is doing their deal. Fund development, typically, most of these boards want you to do some fundraising, either personally by contributing or seeking out dollars. So that's part of it as well. Some it's more than others depending on where they are in their life cycle. And so that's a big question I always ask is like, what's the expectation of me as a board member? Do you want me to be a fund development person, or do you want me to be a treasurer or whatever it may be? Because you want to make sure that fits in kind of what you're thinking of. Like I do business development all day long, so typically I really don't want to do that on a board. I know I'll do some of it, but it's not my main priority. I don't want to do that. Like I do that for a job, right? So I want to do something different.
Yeah, great, thank you. So obviously, I'm looking to become a financial advisor. I took my SIE and everything. So for the people like going into that field, like what would you say like the percentage of like success rate is for that field?
Yeah, that's a really, really good question. It's getting harder and harder to come out of school like yourself, getting into the industry, because commission dollars keep coming down, like the margins keep getting spread, and the business is shifting away from transactional to what we call advisory or recurring revenue. So it takes time to build up a book of business, right? So I think a lot of people come out thinking, all right, I watched so and so make $1 gazillion and I'm gonna be able to do that in 6 months. It is grueling hard work, but if you can get through that first year, the percentages change. So I'll just speak for our program, and we've hired 5 new advisors in the past 2 years. The senior level guys are fine. They take a book of business and off they go. So that's 2 of those, and so we have 3 newer folks. They're all still with us, but one is excelling and two are struggling, right? So, let's say a third of them succeed from the new folks like yourself that come out, because they just don't understand the time commitment and the work that goes into it. And um, we have a higher success rate than the industry because we are in a bank. So as you know, you get lots of referrals from our retail branches, things like that. So the success rate is a little bit better. But to go out on your own and put up a sign on the corner and start is really, really, really difficult. Really
Yeah,
difficult.
that makes sense. So I interviewed Dan Gale, is the guy who actually like pointed me in the direction of NBT.
Mhm.
Last year, I asked him basically the same question, and he said there was about 3% success rate.
Yeah,
So
it's tough. It's tough. Um, And the other thing too is like someone like yourself that's done that SIE, like you've gotten that up. Like some folks don't even understand like what they have to do to get, like they just come in and think they want to be a financial advisor. Well, hey, you got to be certified and get your licenses, and that takes time. So everything that like we've talked about that you can do before that, you just put you up in better position to succeed.
mhm. So like with this like pretty low chance of success, like how would you like kind of give me advice in increasing my likelihood of success?
Yeah. Well, I did first big step, SIE for sure. I think the next thing is I would recommend that you either go to work for a bank or a bank channel that's got an existing program that understands that this isn't a sprint, it's a marathon, and will put the energy and resources into helping you succeed. So that's maybe a salary for the first year or two, partnering you up with a more senior level advisor that can help you, learn and pick that up faster, but also give you some accounts that he or she, is at a level in their life where they don't maybe want some of these accounts and want to start shrinking their book. Um, those are all tools to help you succeed. I would also say that if you didn't want to go in the bank channel, if you went to it, working with an independent, kind of the same thing. You want to find someone that's established, that's looking to grow the practice, but also start maybe taking a step back a little bit from the day to day and the account loads that will give you an opportunity to inherit some accounts, and then a bit so you have that base, and then you can go out and build your own. And then I would also say that we all want to manage money and do that, and that's where the industry is going for sure. But you still need the transactional business to help you, put food on the table month to month, right? So you still need to do fixed annuities, maybe variable annuities. You got to write some life insurance, and so that helps, diversify your compensation, but also makes you a better advisor. You become more holistic. You start incorporating financial planning, which is, something else that, you need to do. You need to be able to offer financial planning. Um, the demographics show us that we're all getting older, but the generation that's getting ready to retire, they need planning for sure. They need to make sure they have enough to retire. They have enough life insurance. Some of these are small business owners that need succession planning. Like there's a lot of need for financial planning, especially in the markets we're in, and you need to be able to at least talk. You don't need to be a CFP necessarily, but you need to incorporate that and partner with a potential CFP to be able to offer that to the client, and that helps. You just build better relationships by doing that as well.
Good. That has not really been something I've been really thinking about. I know that like I've been told that like gaining my CFP would probably be a good thing once I'm into the
Mm-hmm.
field, but yeah.
Yeah. Yep.
So like specifically with your job, like what's like the most difficult like part of your job, and like how do you like kind of deal with it?
Yeah. So at the level I'm at, I would say the biggest challenge for me is, um, well, recruiting right now is tough. The market, as you've heard, is it's really difficult, and we want to grow. And we want to add headcount to our advisors. So that I spend a lot of time doing that. It's difficult in the fact finding folks, but I love it. Like once I identify someone, I have an interview this morning. I mean, it's great. I enjoy that part of it, but it's difficult in finding those opportunities. Um, the HR part is hard. Like, I deal primarily with alpha type, sales folks that just want to run, and which is great, but that comes with egos oftentimes, right? And there's just personalities that I have to manage. So that could be tricky as well. Um, and then making sure that we hit goal, and doing the things that we need to do to get there. I view my job as trying to get the minutia and a lot of the non-revenue tasks off their plate and get them off to someone else, and that could be difficult at times too, because we do work for a corporation and there's things we have to do that sometimes take away from production. So that's challenging. And then the worst part is if you have to let someone go, that's always stinks. I don't care how long you've been doing this or how many people you've had to let go. It's not fun. If you're impacting someone, their family, their livelihood, I hate doing it. And fortunately, knock on wood, I've only had to do it a few times in my career. But yeah, that's not fun.
Yeah, I imagine that's probably the
Yeah.
worst part of the job.
Yeah. Yep.
So when I only got a few questions left. When
Yep.
you first got into the field, like how would you like maintain like your work-life balance?
Great question. So, like lots of young folks, I didn't in the beginning. I just worked 12 hours a day, and just you have to kind of in the beginning. Um, and but I got married early, but we didn't have kids until later, so I was able to do that. And I had my wife super supportive of what I do and what I had to do. So I was able to go to the community events, go to the dinners, go to work early, stay late, miss dinner if I had to. And we both knew like we had to do that to get to where we are today. Um, so that's huge. Having a partner that helps you get there. Um, and as you get older, you get a little bit more wiser, right? Smarter, and you understand that there's more to work. There's more than work, rather, and you figure it out, man. And for everyone, it's different. And what's cool about this job is, for a lot of us, we could schedule our day where, hey, if the kid's got a soccer game at 3 o'clock, go to it. And then if you need to come back, you get on the iPad and laptop and work. So technology has certainly helped a lot. Also, can go the other way too. Like some folks are on the computer all the time. But what I've done for the last 5 years is, once kind of 5 o'clock, 5:30 comes, I'm done. Like I don't get on, I don't check my work email. And I don't email or text my people. Like that's off limits. Like that's your family time. Weekends, same thing. Unless it's an emergency, don't call me, don't reach out to me, don't email me. It's weekend. That's time for your family. Vacation, I try to, disengage, but it depends. A couple days you could do it. For a week, it's kind of hard. You got to kind of check in every now and then. But my team knows that, I work-life balance is really important for me, and I want it to be really important for them. So I mean, I'll yell at them. They call me up, or they're on vacation and they're checking their email. Like they shouldn't be doing that. We all have that time to unwind, and I think if you do that, you're better mentally and sharper when you are back at work.
Gotcha. So with this field, like what are the risks you see like going forward to have like having a long-term career? Like what risks are there?
Yeah, so I think well, it's not as big, but it's certainly a risk. Is kind of the robo advisory stuff where a lot of individuals, think they can do it on their own, right? So that's always a risk for sure. Um, the compliance side of the business continues just to become more burdensome and burdensome, and a few bad apples ruin the batch is so true. And so that we see more and more being asked of us on that side. So that takes away from your ability to produce. So I think the compliance regulatory environment is super, super tough. Um, I think another risk is, like in everything, costs continue to come down, which is good, but it can be bad because it diminishes the ability for an advisor sometimes to be properly feed and paid on a certain style or investment or whatever it may be. So that's for sure. And then I think in general, we're lucky that we have a young program, as you know, but the average age of the investment advisor, I think, is in the 60s. Um, So we got to figure out, we got to find folks like you, Quinn, to bring in and, with the young blood to continue to be able to offer advice to our clients, because if we don't, I don't know what happens, right? So that's something we constantly think about. And I'm lucky from my side of the house that I think I have one advisor in his 50s. The rest of them are 30s, 40 years old. So, um, but yeah, but that's a challenge for sure.
Gotcha. All right. Lastly, is there anything today that I didn't ask you that I should have?
Oh man, that's a good question. You and I have spent so much time together. I don't think so. I think you nailed all the really good questions. Um, yeah, man, I think you covered it.
All
I
right.
think you hit the nail on the head.
Thank you. So yeah, let me
You're
end
welcome.
this recording. Thank you for hopping on.